Hi, good week to all. This is Kelvin here. Welcome to this week's latest edition of our weekly technical outlook, where I'll be sharing with you all the key levels to watch as well as the latest trend bias on the SPX 500, the Nasdaq 100, the Hong Kong 50, the Japan 225, as well as the German 40 stock indices for the week of 13th of June to 17th of June 2022. So before we start, let's take a look at the disclaimer slides first. Okay, so now let's take a look at the momentum analysis across the globe from the major US stock indices from US, Asia, as well as Europe, as represented by the German DAX. So as we all know that last week, the US stock indices actually underperformed across the globe, especially the decline was actually being reinforced by the last 2 days of the trading week for last week, which is last Thursday and Friday. So as we all know that Friday itself, the decline kind of it being exacerbated by this hotter than expected US CPI print for May, which at the moment doesn't show any signs of a slowdown in peaking in the near term, which eventually increases the odds of this Federal Reserve rate hike of more than 50 basis points this coming Thursday in Asia time zone, Singapore time zone. So you'll find out more about the context behind how the mechanism between fundamentals, technicals, and the narrative works. Do actually follow me on Twitter, where actually I have a social media account on Twitter, CMC branded, where I actually share my tweets on a daily basis on the mechanics of the markets in terms of a global macro perspective, as well as news flows and how does it relate to technical analysis. So more on that later I'll share with you all. So this particular video is more on the technical analysis for this week. So as you all could see over here is that the US stock index underperformed. The worst hit was actually the Nasdaq 100, which is negative 5.7%. Number one, why? Because it's actually very sensitive inversely to what I call any potential global increase in global liquidity condition, which is i.e. being translated to a much more hawkish guidance adopted by the Federal Reserve. And what's interesting over here is the Russell 2000. It traditionally it should actually go hand in hand in terms of performance, the performance with the Nasdaq 100. They should be actually the one that is underperforming as well, more or less within the same magnitude as the Nasdaq 100. But last week they actually outperformed among the major US indices. Yes, even though they are still negative, but their negative is much lesser versus the S&P versus the Dow, slightly below the Dow, and versus the Nasdaq 100, which is that negative 4.4%. As those who actually followed me regularly in my this weekly technical outlook video, last week I did mention that what we are seeing right now, the down leg on the major US indices is considered as the capitulation leg. Capitulation leg. That means the final down leg of this ongoing major downtrend that is in place since the start of the year. If you look at SPX, or in November, if you look at Nasdaq 100 from the all-time high, that means in terms of Elliott wave factor analysis, we are now into tail end to complete this multi-month down move wave A structure, where we could start to see a capitulation move, which is roughly to occur perhaps maybe this likely to be this week or early next week, given that we have a major risk event that is taking shape this week, which is the Federal Reserve FOMC meeting, and then thereafter we could start potentially see in Q3 the start of a potential multi-month corrective wave B. Okay, still corrective. It's not a major bottoming condition. That means, i.e., after that, we could start to see another down leg of multi-month down move to actually start to actually potentially break lower low. All right. So what's interesting over here is that the one that is could be leading this potential multi-month corrective wave B up move in Q3 will be the Asia stock indices, especially the Hang Seng and the Hang Seng Tech Index. If you look at, they actually outperformed last week. Most starkly will be the Hang Seng Tech Index, which is up 9.75%. All in all, number two reasons. First reason, we could start to see more signal coming out from China top policymakers that they are actually slowing down the noose that is being tightened around China big tech stocks in terms of their business model, how they operate. As you all know that in since the suspension of Alibaba and IPO, there's been a lot of measures that's being we call it stipulated or being gunned down towards China big tech stocks to actually make them more like a utility stocks rather than a growth oriented stocks by clamping down on their business practices like this. They can't do various XYZ in the Chinese economy. But right now, due to the COVID zero stringent lockdown that's being adopted in China, they need to loosen this noose to actually to prevent further contraction in the China economy. And also, what we could see right now is that there's more guardians in terms of expansion, like accommodative fiscal and monetary policy. So that could actually drive up a bit of optimism in the China-related stock market. So that could actually explain this recent 2 or 3 weeks of outperformance of China-related stock market, which is as I highlighted on the Hang Seng Index and the Hang Seng Tech Index over here. And you also could see in terms of their we call it the momentum analysis by taking the difference of their last week performance minus of a 4-week average, which is in terms of magnitude-wise, they're also showing the greatest performance among the major stock indices. So what we see over here, the Hang Seng Index is negative 6.3, positive 7.5 for the Hang Seng Tech Index by taking into the difference of last week performance versus the prior 4-week average. Not too bad for the Nikkei 225, almost unchanged at almost slightly down lower for the difference, negative 0.5%. But the last week performance was almost unchanged at 0.23%. Uh, the German DAX also fared pretty badly, to almost the same as the US counterparts, negative 4.83%. In terms of their difference was the worst, which is at negative 6.25% if you take into account of their last week performance versus its prior 4-week average. So all in all, now let's take a look at very quickly, right? The 11 S&P sectors weekly performance for last week. So what we could see over here is that all 11 of them are in the red. As usual, the one that is outperforming is the S&P Energy Index, which is down close to 0.9% for last week. A huge difference between the benchmark index of a negative 5%. And the worst hit was actually the information technology as well as the US financial because of this yield curve inversion, where the 30 and 5 year has started to inverted, and the 10-year and 2-year is coming close to inversion uh, as well. So that could actually explain the underperformance of the US financials for last week, which is now negative 6.7%. Okay, great. Now, very quickly, now let's jump into the main gist of this video will be the technical analysis. Okay, let's start with the S&P 500 first. We go on to the daily chart. So what we could see over here is that, okay, right now, today's, because we actually track the S&P futures, this is our platform. So right now, the index actually down by close to more than 1%. So it's actually testing the 20th of May, the recent swing low that give rise to this multi-week corrective rebound initially. Okay, then the rebound actually thereafter reacted from this former expanding wedge resistance, previously support now turns to resistance, and also the 50-day moving average, and refused to break up above and stage this last push down. So all in all, what you could see, this push down is very steep. So it's the steepest move if you could see in the very similar to what we see earlier on at the start of the year. All right. So in terms of Elliott wave speed, right, this is the wave 5 of this major downtrend wave A that has taken shape in the start of 6th of Jan 2022. And we have a Fibo expansion 0.618 typical wave 5 target, taking from the high of 4th of Jan, project it to the low of 13th of May, and project it to last week, 2 weeks ago, high of this last corrective, multi-week corrective up move is 30th of May, 0.618% give us at 35.80, which is correspond to this branch of congestion zone over here as well, this graphical support. So all in all, what we could see over here is that this move over here is a very we call it a capitulation down move to actually more or less kind of complete this major down move phase labeled as wave A in terms of Elliott wave that has taken shape since the start of this year. Then thereafter, this is the what I call inflection support level that could actually potentially kickstart this multi-month corrective rebound. What I mean by multi-month, that means multi-month as it the duration is much more compared to the rebound that was seen from 20th of May to 27th of May, which is only 1 week, and also the previous rebound from 24th of February to 30th of March, which is only about 2 weeks, sorry, 3 weeks plus. Okay, so if this end of this potential wave A, the wave B is more like a 1 to 3 months corrective rebound, but this is not a major down move, major bottoming configuration yet. All right, it's just a corrective rebound to retrace this entire down move as we expected from the high of 6th of Jan towards this inflection zone, support zone at 3580/3430. And also, if you look at the RSI right now, the RSI right now also hasn't hit the oversold level yet. And we are showing any bullish divergence at all. So giving support to this capitulation move that was started in last Thursday, we have still a bit more leg to go for this week. So i.e., we do not expect a corrective rebound, a corrective rebound to start this week. Perhaps maybe give it another 1 week more or so, right, on the SPX 500. So without further ado, this will be the strategy that we have for the SPX 500. So those who follow me last week, we're actually looking for to further push down towards 3840/10. Okay, so support level has already been met. So what we could see right now over here is that the 4-hour RSI already hit an extreme oversold level at 19%, where potentially perhaps we could start to see a minor bounce that could actually last for 1 to 2 days towards 3980, but we will actually tighten the key medium-term pivotal support for this week at 4075, which is this former minor range support that gives rise to this last Thursday and Friday steep down move. So definitely for sure, psychologically, this is a key resistance for this week. And also in terms of the Fibo retracement, if I were to retrace the start of this steep downtrend, last week's steep downtrend, it's close to 61.8% as well. All right. So all in all, right, we're still looking to actually have a bearish bias, but a capitulation down move. That means we're coming towards a tail end of this major downtrend with A. So all in all, we are looking to actually see this move towards a bounce first, 3980, then thereafter to actually see 3760/3720, a break below it should take us down towards 3630/3580. However, if we have a 4-hour close above 4075, then we may see more of a sideways push up configuration to retest this former range top area again at 4217/4310, which is on the daily chart is much more clear. This particular zone over here, which is also the 50-day moving average. All right. So now, next will be the Nasdaq 100. So very similar to the SPX 500, it got rejected at this swing high area of 2nd of June, and the 50-day moving average at 12,960. So right now it's fast approaching Asia time zone. Asia session intraday right now is fast approaching the 20th of May swing low area. So similar as well on the SPX, we have a potential wave 5 ending move, bracket wave 5 of this major down move that started in November all-time high, which is 2021, to actually end this multi-month major down move, which is bracket 5 of A, which is at 10,960/10,670. In conjunction, is actually related to this graphical support zone here at 30th of October and 24th of September. So given that Nasdaq is the underperforming index over here, so we will start to see a slightly a higher Fibo expansion target, okay, taking from the high of 22nd of November to the low of 20th of May, project it to the 3rd of June, it give you a 0.382%. All right, which is also considered as a potential fifth wave target in a 5-wave down move. Okay, so this is a what we call that this is a inflection zone where potentially this capitulation may end, and thereafter we will start to kickstart a multi-week 1 to 3 months corrective wave B. And I stress again, this is a corrective multi-month wave B. It hasn't shown any signs of a major bottoming configuration yet. That means, i.e., to kickstart a multi-month impulsive up move to take us up to fresh all-time high above this 16,770, 16,900 that was actually seen in November last year. No such very low odds, very low possibility of such movement. All right. So there's what's supporting this capitulative down move will be the daily RSI hasn't yet hit its extreme overbought level, and there is definitely no clear sign of a bullish divergence signal. Okay, so what we have in store for this week is that last week still recall that we have a potential support level to watch for to play that down move towards 11,600/440, almost hit already. So given that the 4-hour RSI is oversold, it's at its oversold region, so there's a risk of a 1 to 2 days of minor bounce towards 12,070, maximum 12,450, which was last week range support, now turns into a pullback resistance that give raise to this last 2 days of steep downfall. And also, if you look at the Fibo retracement, it's at 61.8%, close to 61.8% as well. All right. So now, all in all, as long as 12,450 holds, didn't break above it, you have a 4-hour close, which we expect another potential impulsive down move to complete this bracket 5 of A at 11,000/10,960. So this is an inflection zone level. Okay, but however, if we have a 4-hour close above 12,450, then we could see a kind of very choppy up move to retest the range resistance at 12,960/13,080. Uh, Maximum 13,500. So you would see the daily chart is actually at this zone over here, right? This congestion, this uh, very clearly key congestion resistance zone. All right. So now moving on to the Hang Seng Index. So Hang Seng Index over here is pretty wishy-washy, the price movement. So what we could see over here is that last week it tends to stage a push up. It broke above our key, we call it tight medium-term pivotal resistance level slightly, but it didn't actually hit above the range, clear above the range top of fourth range high of 4th of April at 22,640. So where it stored? It stored actually at the gap resistance over here, which is at 22,256. So give or take, this is a pretty much key stubborn resistance zone. It seems to me that since 15th of March until now, it's trading inside this sideways configuration. It could be a triangle, all right, or some could say that this could be a potential medium-term bottoming formation as well, given it start to trace a series of higher low that was seen since 12th of May. Okay, this low was higher than this low higher than this low, and right now the price action is also intending to shape a bounce as well by shaping a 4-hour bullish hammer configuration right above this steeper ascending trend line support that I draw from 12th of May 2022 low. So all in all, what we could see over here is a pretty much very we call it mixed picture that is on the Hang Seng Index that is being trapped within this kind of a complex multi-month range configuration that is in place since 15th of March. So for this week, right, rather turn neutral between 22,640 and 20,780. So what's 20,780 is actually the former swing high area of 17th of March, May, and 20th of May broken now turns into a pullback resistance and also confluence with this steeper short-term ascending trend line support that I drawn from 12th of May 2022 low. So neutral between these two levels. So if we start to see a break below 20,780, then it could take us down a further slight drop within this complex range configuration to test its its medium-term range support, which is the important level at 19,990. Why is it important? Because there's two confluencing elements: the swing low area of 18th of May and 25th of May, as well as the trend line support that has been holding previous sell-off since 15th of March 2022. But if we have a 4-hour close above 22,640, then we could see an extension of this corrective rebound move to actually reinforce this Hong Kong 50 outperformance against the rest of the world towards the next resistance at 23,000/23,380. Okay, now moving on next to the Nikkei 225, which is another major Asia stock indices that we track closely almost every week. Okay, will be Okay, so previously, right, in the Nikkei 225, what we have is that before we go into the strategy chart, is what we could see over here is that it's a bit of a failure bullish breakout from this descending trendline resistance. Previously, it broke above on the earlier part of last week, the 6th of June. But however, it got rejected right at this pullback resistance over here. Okay, this former pullback support turns a pullback resistance. Okay, and it reintegrate back on Friday night, because if you are we track this particular our index, for example, you track the Japan 225 futures, which is also tradable during the US session, based on Globex. So what we could see, this Nikkei 225 over here, it reintegrate back below this descending trendline resistance that was in place since 14th of September. So giving rise that last week earlier push up was actually a failure bullish breakout. And also it's being represented by this daily RSI as well, which actually has a bearish reaction right off this key corresponding descending resistance at the 63% level, right? That managed to join the peaks of the price action as seen in the corresponding in the price action of the Nikkei 225 or Japan 225. So all in all, what we could see is that it's being stuck within this range configuration at 27,760 and 25,700, which is the swing low area of 12th of May. Okay, so our strategy, right, if you recall that last week we actually playing a push up right towards 28,650 slash 28,680. So yeah, it did push up at last week, but however, since the mid of last week, which is 9th of June, it only printed a high of so it means on Thursday morning, it only printed a high of 23,000, okay, 23,380 thereabout. Okay, let me remove this. Okay, sorry, let me delete this. Okay, at 23,000 396, which is 28,000, pardon me, 400. A bit of miss slightly of our resistance or level that we expected, and this shape this failure bearish breakout. So all in all, what we could see is that for this week, right, we are actually turning bearish to play down a push down within this range configuration, using 27,760 as my key medium-term pivotal resistance. So the RSI now is at the extreme, coming very close to the extreme oversold level at 21%. So we may expect a minor bounce first, 1 to 2 days of bounce towards 27,380, before shipping this potential further drop towards 26,500, followed by 26,000 level. So what's this 26,000 level? Is actually this ascending trend line support that is supporting it, previous drop since the low of 8th of March 2022 low. Right, so still all in all is the preferred scenario right now is to look out for a further drop below 27,760 to play down towards the lower boundary, towards the what you call it, the lower limit of this range configuration at 26,000. But however, if you have a 4-hour close above 27,760, then we could start to see extension of this corrective rebound towards the 29 March 2022 swing high area at 28,650 slash 28,680 level. Okay, now the last index I'll share with you all will be the German DAX. So yeah, today is a bit long. Why? Because I need to explain to you all my thoughts, especially we are now coming very close to a capitulation point for the US stock indices. So without further ado, now the German DAX. So where did it got rejected? It got rejected at this area here, which is the former swing range support area, now turns into a pullback resistance, 14,810 slash 15,030 level. It previously was from 6th of October all the way up to 16th of Feb. It was actually acting as a major range support. Then after that, once it broke, it gave rise to this the prior steep decline to actually hit this 7 March 2022 swing low at 12,430. And also this former key range support turns into a pullback resistance, so confluence with the 200-day moving average. So what we could see now is price action on Friday actually reintegrate back below the 50-day moving average, now acting as a resistance at around 14,100 level. And the RSI also broken below a ascending trendline support level and still has room to push down further towards this upper sold region. Okay, so all in all, what we could see over here is that potentially it could drift towards lower towards this 12,430. All right, so for this week, right, the strategy for this week, if you recall last week, we actually played that push down towards 13,800 level. So it already hit 13,800. Asia session now based on our platform, it printing a low of 13,505. 503, pardon me. So with the 4-hour RSI at the extreme oversold level, pardon me. So what we could see is there's a risk of a minor bounce as well. So right now, intermediate resistance for that bounce will be at 13,900. So using 14,320 as my key pivotal resistance for this week. Okay, that means we tighten it down to 14,320, pardon me, 14,320. This former swing low area broken down that gives rise to last week's steep fall on Thursday and Friday. And also, if I were to do the Fibo retracement, okay, from the entire move, okay, it's close to 61.8% as well. Okay, so all in all, right, looking for as long as this minor bounce being held below 14,320, we expecting a further push down towards 13,300 slash 13,340, followed by 13,020 level. Okay, what's 13,020 level is actually confluencing with a Fibo retracement level, taking from the low of 7 of March to the high of 29 of March at 76.4%, to which is close to this minor congestion swing low area at 11 of March as well, and doing a Fibo extension from this current down move, taking into account of the swing high of 29 of March. Okay, project it to the low of 10 of May to the last swing high of 6th of June. It gives rise to one-time Fibo extension. So this is kind of a pretty key level or inflection level that the price may actually get attracted to it at 13,020. But however, if we have a 4-hour close above 14,320, then we start to see another wishy-washy choppy up move to retest that what I call it, that significant key range resistance at 14,600 slash uh, uh, 14. This one should be 14,600 slash 14,800. So this level, if you go on the daily chart, is this level over here. All right, the lower limit over here. So with that, so before we go, let me share with you how to actually follow me on Twitter, where you can actually get daily updates on the mechanics of the global macro picture on how fundamentals, technicals, and we call it sentiment, impact the major asset classes. So this is my Twitter account. So do give me a follow. You can follow me at Kelvin SC Wong. Just open a Twitter account, it's free. Then you type in at Kelvin SC Wong. Then give me a follow and on my notification. Then where you'll be able to get a fresh update every day on the daily musing on the global financial markets. So with that, have a great week ahead, and I'll see you again in my next video.